As Bitcoin tries to muster up the strength for another attack at the key $29,000 level mark, are we sleeping on this one particular altcoin which could be the next to explode? You can see here on the Bitcoin chart, Bitcoin is sitting at 28.5k and trying to go ahead and mount another attack at 29,000. In this video, we're going to be talking about Ethereum. Yes, because Ethereum is creating a very important pattern here on the daily chart, namely an inverse head and shoulders pattern. I'm going to share with you the exact price target and why I think this could be a very important narrative just 7 days away from the Shanghai upgrade. This could be a counterintuitive approach, but I think we could see a bit of a movement happening here on Ethereum in the lead up to this important hard fork. Make sure you smash the likes. Don't forget to subscribe, guys. We've got so much to get through today. But first, I want to start off with Bitcoin, because Bitcoin has done a really good job. Yesterday, in our video, we spoke about the importance of this symmetrical triangle breakout. As I went to bed, I mentioned on Twitter that, guys, we're looking for a breakout here. You got the breakout here perfectly. You met the price target at the top of this pivot point here, and now you're going into another consolidation, right? Now you're falling into a consolidation on the 5-minute chart, and the reality now is going to be, does Bitcoin have enough strength to go and work through 29,000 with volume? It continues to be that battle, like it has been for a while. We've got to break through 29,000. If we don't, we do risk curling over, guys, and that could be a problem which we need to address and we need to be cognizant of, because if I remove all the drawings, you've had a big move here and you could easily curl over if you start to lose steam. You'll lose steam in volume, you'll lose steam on the RSI, and that could mean we need to come down to 27, 26, and maybe even 25. Now, I've shared in previous videos why I'm not too concerned about those levels. I mean, if we look at the daily EMA ribbon here, you can even go all the way down to 25,200 here on the EMA ribbon without losing your daily EMA ribbon. So that's all looking fine here. Now, ideally, nobody wants to go into the EMA ribbon, right? Everybody just wants Bitcoin to break through 29 now, go towards 30, and then onwards we go. Either way, I'm happy. If we come into the EMA ribbon, I'll nibble some more. If we don't, great stuff. I'm happy with my Bitcoin position and I want it to carry on moving. But we spoke yesterday about the importance of potentially seeing an altcoin season. Now, if you're not following me on Twitter, make sure you are. Real Ijaz 1. I posted a real in-depth thread here going through what we need to look for in terms of an altcoin season. And of course, we're not there yet. I mean, if we come on over here and use the most important chart, which is the Bitcoin dominance chart here, on the daily, we are running into a very important resistance at this 48% mark. Now, look at what's going on, guys. If I show you this on a simpler approach, which is using the line graph, what do you notice? You've had a double top. You've hit it, you came back down, you've gone hit it again. So we could be seeing a big fall to the downside here in dominance, which could suggest that altcoins are ready to move. Now, it's still a little bit early, but today we woke up and we've seen signs of that. I mean, if you look at what's going on today, you've got Bitcoin running at 1.3%. Great. Ethereum is moving at 2.2% today. You got Phantom moving 7.3% today. Dogecoin moving 3%. You got Avalanche moving 2.5%. Now you're seeing altcoins start to outpace Bitcoin, which is why you're seeing now 4 candlesticks to the downside on Bitcoin dominance. So very important to watch this. A lot of people who are Bitcoin maximalists are sitting there saying, no, it's going to be Bitcoin, it's going to be Bitcoin. In order for Bitcoin to go have another run on its own without altcoins moving, it'll need to break through 48 and work its way to the next level, which is at 52, okay? And that would mean Bitcoin can outperform altcoins for the next leg as well. But right now, we're seeing a little bit of rejection at 48%, so you've got to be prepared, and that's why it's important for me to make sure I'm dollar cost averaging in on my altcoins as we go along. Trying to time this is very, very dangerous. That is why I pick my portfolio. I decide how much Bitcoin, how much Ethereum, how much of Phantom, and all the other altcoins I want in a portfolio, and then I DCA in. Trying to time this is going to get you wrecked. There are some people that are like, no, rotate into Bitcoin, and then when it's altcoin season, rotate across into altcoins. That is the quickest way to get wrecked. You're going to miss a Bitcoin move, you're going to miss an altcoin move, and it's painful, painful, painful to try time the market. Anybody who tells you they know exactly when it's going to happen, they're absolutely lying, okay? So watching on dominance here, you can see that little rejection happening there. You can also draw yourself a little bit of a trend line up here to see, does it want to come down here and test that trend at 44%. That then brings us on to some important macroeconomic updates before I then come on to Ethereum, because what I want to share with you is the environment's getting very interesting now. You had Fed official Mester who's one of the officials on the board, come out and say we need to raise interest rates above 5%. So she's saying here, she's a Cleveland president, policymakers should push up the benchmark rate above 5% and stay there for longer. That's her view on where things are going. Now, interestingly, if we take a look at what markets are pricing in, markets here, let's get a refresh so we can get the latest reading because it changes all the time. There you go. 64% of the market are pricing in a pause right now. Okay, so they're trying to keep this strong front at the Fed to say, no, we're going to keep going, we're going to keep going. But the market's saying, hang on, you're probably going to pause in May. If not by May, then definitely by June the 14th at the next meeting. So one thing we do know, and the market is already pricing in, is we are in the final innings of this rate hike cycle. Soon we'll get a pause. And then the conversation is going to be, how long do you want to stay at this rate, where we're currently at, whether it's 4.75 or 5? How long are you going to want to stay there for before you start to cut? Now, what will then play into that is all the other things going on, because China and Malaysia are now discussing an Asian monetary fund to reduce dependence on the US dollar. We've spoken about this at length over the last few weeks. There's a huge move, a huge coordinated move by major economies, guys. Major economies, more than I've seen previously in historically, to de-dollarize, okay? There's this de-dollarization going on where countries are saying, we do not want to be reliant on the dollar. Of course, Russia doesn't want to be reliant on the dollar given what's going on. Of course, China doesn't want to be reliant on the dollar. We're now seeing other countries like Malaysia and Saudi Arabia and many other countries in the region, including India, now saying we don't want to be dependent on the dollar. And now you're in this position where the dollar is having huge weakness. If we jump on over to the dollar index, let me show you the dollar index, because remember, crypto is inversely correlated to this dollar index. So it's in our favor for this to retrace heavily to the downside. Just a little while ago in September, this was up at 114, okay? You're sitting at 114. Now you're sitting at 101 with a chance of retracing down all the way down to new lows here in that 89 region. And if we do fall here down in this region, if we have this move, crypto will do very, very well. We already monitored this. When we were here creating this high here, I said, guys, when this corrects on the weekly, when the weekly EMA ribbon breaks, we're going to do really, really well. And so far, we got the break. We came all the way down here. We monitored it all together, guys. If you're following this channel, you would have benefited from Bitcoin moving from 15,500 to 28,000 where it is right now. A lot of you have doubled up on your money if you time this correctly, catching the dollar index, moving to the downside. And now what are we seeing? We're seeing it back test on the other side and get rejected again from its weekly EMA ribbon. Look over the last 4 weeks here, getting rejected again. Now it needs to push lower, break below the 200 moving average here, 200 exponential moving average, and have another leg to the downside. And every time it has a leg to the downside, guess what? Bitcoin has a leg to the upside. And we're seeing that countries are meaning business behind this. On top of that, JP Morgan CEO Jamie Dimon comes out and says the banking crisis is not over. There's going to be more pain. So that, the Fed and the politics around it trying to say, no, we've got this under control. We're going to keep doing our rate hikes. Don't worry about it. But the reality is we know these banks are in problems. And if the Fed decide to keep increasing rate hikes, it's just a matter of time before more and more banks expose their liquidity troubles. And this is going to have further impact on the US banking sector. Now, one good piece of news came out yesterday, and that was the JOLTS figure, which came out less than expected. Remember, this is the number of job openings. This was expected to come in at 10.4, about here where my cursor is. It came in at 9.93 million new jobs created. This is good. It now means that the ratio of number of jobs available is sitting at about 1.6 to every opening, okay? Supply to demand. Now, remember, the Fed official, Jerome Powell, said he wants that in equilibrium. He wants one job supply to one job being demanded, okay? That creates balance in the labor market, which obviously controls wage pressures. We're still far off pre-pandemic levels, so there's still a long way to go, but he is starting to get that softening in the labor market, which he's been speaking about at every one of his appearances and FOMC meetings. So that's the macro climate we're working with. And right now, what we're going to see, in my opinion, is I think we will at some point, once Bitcoin clears this 29,000 mark, start to see more and more funds rotating into altcoins. And I'm sitting here looking at the Ethereum chart, sitting at 1900, and it's forming this very important inverse head and shoulders pattern. Again, guys, if you're not familiar with this type of pattern, ijaz.uk/TA, we go through this completely free TA course, guys, structured in a full curriculum. I'm not charging you a single penny for it. Take advantage of it, ijaz.uk/TA. You will learn and spot these patterns. It also comes with a crib sheet, which you can download, link in the description, with all these chart patterns on it. you don't have to wait for me to make a video. You should start spotting these yourself and be able to trade them as well. And if you want to trade, Bybit, link in description, Binance, link in description, both affiliate links which support the channel if you choose to trade, and you get some amazing bonuses as well. Now, how do you take the measured move? Well, you take the measured move like this to the bottom of the head, you apply this to the point of breakout very crudely there, and what I now show you is this will then take you to that region of 2300 here on Ethereum. So Ethereum is definitely shaping up very nicely. If I show you how we're looking on the EMA ribbon as well, look at that nice extension here on the EMA ribbon. Again, do not be surprised to see it want to cool down a little bit first, collect some support before then going on the next move, but it's looking nice and strong. You're seeing money start to flow into Ethereum, and this is definitely not one you want to sleep on. Yes, you do have important resistance about 1980 here, where my cursor is right now. That will be an important level of resistance, but once you start to fill these gaps, if I jump up to the weekly chart, what you'll start to see is you have a big gap to fill. Just like Bitcoin, once Ethereum clears this level around that 1950, 1980 level, you then have a big gap to fill all the way up to pretty much 3,000 here on Ethereum. If I bring out the VPVR as well, you'll see that the volume is heavily traded right now, but once you clear this level, it does significantly become less once you clear this level that we're at here on Ethereum. Now, some of you are going to be screaming, yeah, but what about the merge? The merge is coming, the Shanghai upgrade. Now, if you want a separate breakdown, I've done a full breakdown here on the Shanghai upgrade. Go and watch that. Make sure you understand exactly what's happening, because this is now about 7 days away for the mainnet Chapella upgrade. Now, this has got a lot of people really confused. Say, is there not just going to be selling pressure on Ethereum? And the reality is, yes, there could be, but let's do some analysis to actually understand what extent of selling pressure can there be. Now, separate from that, what I'm saying is I think there could be a crazy run up with the excitement leading up to this upgrade over the next 4, 5, 6, 7 days, which is going to be interesting to monitor. Now, when the actual unlock happens, what it then means is there's going to be a huge amount of Ethereum which can finally be unlocked and withdrawn to the extent of $32 billion worth of Ethereum. Now, if you were to take a look at who holds the majority of that, you can see that the 30% of that sits with Lido, which is obviously a liquid staking platform. We'll come onto that shortly. 12% sits with Coinbase. Another 7% sits with Kraken, Binance with 5%. So the majority of these holdings are sat with a few big centralized players. Now that comes with its own issues. I made separate videos complaining and moaning about the fact that since Ethereum has moved to ETH 2.0, becoming a staking platform, it's very centralized, right? It's centralized by these players who control the stake. And that's just the reality of it. But this, in the case of withdrawals, will actually mean these people have less incentive to withdraw. You can also look at this piece by Binance, where Binance made a very good point, which is, hang on a second, 57.7% of staked ETH is already liquid because people are using things like Rocket Pool and Lido, and they're using staked ETH and RETH. They already have access to their capital, so they don't feel like they're missing out. It's not like you locked up your Ethereum and you weren't able to touch it for many years and nobody was making any gains on it. No, they were using staked ETH. Now, I don't like these liquid staking protocols, but the point I'm saying here is 57.7% of those people who have staked ETH already don't feel like they're missing out because they're using Lido and Rocket Pool to make their gains. They've got liquidity right now. And the other point here, as shared by Dune on their research, is 72% of the stakers are actually underwater. They're in a loss. So are they really going to want to sell here at a loss where they've sat for 2 years, they've seen Ethereum go up and then back down again? Are they not just going to want to wait till at least their bag is in profit before selling? So when you look at all of this, coupled with the fact that there's going to be a cap of only 90 million Ethereum being able to be sold a single day, will it really have crazy huge down pressure? That's what we're going to have to monitor. But my view on this is I think we've still got 7 days beforehand, and I think this is definitely in the long run not an altcoin I personally would not want in my portfolio. So this is definitely one which I think could be seeing a lot of benefit from funds flowing from Bitcoin into Ethereum. Remember, the traditional way of alt season starting, generally you see Bitcoin move. Bitcoin has its crazy move. Then you start to see a few random things happen. Sometimes you see a Dogecoin moving. I mean, Dogecoin has predicted the last 2 bull markets perfectly. Meme coins just suddenly start moving. And we've seen that over the last couple of days. Some people said, oh no, but Dogecoin's only moving because Elon Musk tweeted. Yes, Elon Musk tweeted. But if Elon Musk tweeted when Bitcoin was sitting at 15,500, when FTX was collapsing, when all the things were going on, it wouldn't have mattered. It wouldn't have mattered because there was no liquidity in the market. Now you're starting to see global liquidity increasing, and that is why tweets can start to have an effect. And when good news starts to have an effect, that is a clue that we're starting to get into a bull market. You could have announced some amazing good news on your favorite protocol, whether it was Phantom, Avalanche, Matic, anything else, the reality is, in the depths of a bear market where Bitcoin's sitting at 15,500 and people are calling for 8,000, 6,000, 7,000, the good news doesn't matter. But when you're in a bull market and companies are saying, oh, we're going to put Bitcoin on our balance sheet, or you have Tesla saying we're going to buy some Bitcoin, or you have this project announcing a new upgrade, you really start to see the coins pumping because there's liquidity to move over into those altcoins. So that's the traditional route. You see Bitcoin moving, then you start to see some random activity from some meme coins, then you see funds moving into Ethereum and other large caps, and then normally what I like to see then is seeing that move across into layer one solutions, which, like I've always said, when this market starts to recover, I think layer one solutions are the ones where you're not going to want to miss those in your portfolio. So there you have it, guys. Hope you guys enjoyed this video. As always, smash all the likes. Don't forget to subscribe. Go watch this video here, and I'll see you in the next one.